joining us today. Hello and welcome to Business Daily. I'm Lee Ji-eun in Seoul. We have a lot on our plate today, so let's get started with the day's highlights. Korean stocks, along with other Asian indices, fell on Monday after terrorist attacks in Paris on Friday sent investors to safe havens across the world. Do you really know how much you're paying for your beauty products at local drugstores? If you believe they're cheaper than department stores, figures show that you might want to think again. While the Paris attacks have turned the G20's focus toward defeating terrorism, conventional economic issues have not been put aside. During the meeting's first session, President Park Geun-hye revealed her plan to support annual joint investment by the international community for Northeast Asia worth 63 billion US dollars. Now, the amount is based on the projected yearly demand for infrastructure development in the region, including from North Korea. But the senior presidential secretary for economic affairs told reporters that the plan could only go ahead if Pyongyang gives up its nuclear program. President Park also spoke about her initiative to create a Northeast Asian Development Bank, a proposal she had previously made to individual countries, but not at a multilateral event until now. Lotte Group founder Shin Ko has filed lawsuits against CEOs of the group's 7 business units for allegedly interfering with business management. Law firm DW Partners said it filed such claims with the Supreme Prosecutor's Office on behalf of Shin on Thursday, saying they have failed to report to the business tycoon since late last month, despite repeated requests. Shin also accused the chiefs of Lotte Shopping and Lotte Corporation for underreporting investment losses in China, which they said stood at 272 million US dollars this past July and October. The 7 business arms include Lotte Shopping, Lotte Confectionery, Lotte Engineering and Construction, and Lotte Corporation. Shin was demoted months ago to honorary chairman after a family feud erupted over leadership succession at Korea's 5th largest conglomerate between the founder's 2 sons. And for more on last week and this week's stock market action, we have economics reporter Choi Jin-seok from SBS CNBC joining us on the phone today. Hello there, Jin-seok.
Thanks for having me.
So let's get started with an overview of how the Korean stock market closed last week.
Yeah, both the Kospi and Kosdaq finished lower at the close of last week. The Kospi fell by more than 1% to close at 1973, which is viewed as one of the key support levels. Foreigners have been net sellers of stocks for 4 consecutive sessions, dumping 210 billion Korean won, or about 180 US dollar worth of stocks last Friday as well. Institutions warned a hell for the market, selling off 44 billion Korean won, or more than 37 million US dollars worth of stocks. For the entire week, the Kospi gave up 3%, the Kosdaq more than 4%. Both indices suffered from foreigner selling pressure. Negative sentiment throughout global equity markets encouraged offshore investors to sell in one of the most liquid markets in the world, Korea. The Dow Jones Industrial Average in the U.S. fell by 3.7% last week, also its worst weekly drop since September. The biggest concerns for investors throughout the week were the European economy or weak GDP numbers, tepid data from China, and the prospect of a Federal Reserve interest rate hike in December.
Then how did the Korean stock market close on the first day of this week?
Both indices closed significantly lower amid uncertainties surrounding Paris attacks over the weekend. The Kospi lost its key support level of 1950 to close at 1943. The Kosdaq fell further by 1.6% as well. Both indices shed losses during market hours helped by stock buying from individual investors, but the Paris attacks weakened already slack market sentiment, thus leading to a big sell-off by foreign investors. Foreigners, who were the only net seller of the market today, dumped more than 230 billion Korean won, or about 200 million US dollar, on the Kospi. Airline stocks and tour companies took the biggest hit because such events often discourage tourists from going abroad. Both Korean Air and Asiana Airlines fell by 3%. Hana Tour was down by almost 9%, and Modu Tour was down by more than 4%.
All right, let's now move on to some major market events lined up for this week then. Now, people will be looking to pore over the Fed's minutes scheduled for release this week.
That's right. The timing of the Fed's first rate hike in nearly a decade is still a dominant factor in global equity markets. On Wednesday local time, the Fed will disclose its October Federal Open Market Committee or FOMC minutes. The markets will keep a close eye on the backdrop of the Fed's decision to hold its benchmark interest rates in last month's decision. Along with that, U.S. inflation data, which will come out on Tuesday, will draw market attention as well. The Fed is focusing on labor market conditions and inflationary pressure to decide on its policy direction. Oil prices will be another focus as well. The price of West Texas Intermediate, or WTI, fell more than 8% last week. It was the worst weekly performance for the asset since the middle of March. Lower oil prices can be a positive factor in boosting consumer spending, but also in mind will be oil companies will take a hit from falling oil prices.
And of course, last Friday's attacks in Paris are also expected to add more uncertainty in the global financial markets.
Yeah, historically, such events have heightened geopolitical risks throughout global financial markets. According to Investopedia, U.S. stock exchanges were closed for 4 trading days after 9/11, reopening on September 17. The Dow Jones Industrial Average fell by 7.1% on that single day, while the S&P 500 plummeted 13.5% over the week at its lowest point. But by the end of 2001, the S&P had recovered and was actually up 5.1% from its September 10 close. The Korean stock market showed similar movements following the occurrence of 9/11. The Kospi index fell by more than 12% a day after the terror attack, but recovered a few months later. That's why experts expect the impact of the Paris attacks on the markets will be short-lived. However, we certainly will see more cautious and defensive decisions in the face of heightened tensions just like today. This has been Choi Jin-seok from SBS CNBC.
LG Electronics OLED TV has received top marks from U.S. consumer review magazine Consumer Reports. In the recent review, the 55-inch LG OLED TV earned the top grade among rival models in the 55 to 59-inch group with a total score of 80. The model was especially praised for its resolution, viewing angles, and lack of motion blur. Second place was grabbed by another LG model, the Ultra OLED TV, followed by Samsung Electronics Ultra HD models in the third and fourth spots. Korean manufacturers claimed the top ranks in all 6 segments categorized by the evaluator, including HD resolution, 3D performance, and sound quality. Hyundai Motor has announced that global sales for its luxury Genesis series topped the 400,000 unit mark in October, since first rolling out in 2008. Korea's largest automaker said it sold 202,000 units in the domestic market, while projecting global sales of the high-end sedan will exceed 200,000 by the end of November. The Genesis BH model series, launched in 2008, saw over 260,000 units sold worldwide, while the second-generation DH model, released in 2013, has sold almost 140,000 units, with more being picked up overseas than here in Korea. Earlier this month, Hyundai announced plans to spin off its Genesis series as a separate luxury brand called Genesis Motors to make its way into the global luxury car market. Seoul is well known for its sprawling reach and bustling population of 10 million. With roughly 17,000 people per square kilometer, the mega capital boasts a population density that's almost twice that of New York. But recent figures show that Seoul may be facing one of its biggest exoduses yet. Our Lee Ju-young has the story.
The number of Seoulites who picked up and left the capital city in the third quarter of this year hit a 13-year high. According to a report by Statistics Korea, the net outflow of Seoul's registered residents was roughly 37,500 people, accounting for around 0.4% of the city's population. Out of those who left, 7 out of 10 people chose to settle in the Gyeonggi-do province, which surrounds Seoul, followed by 32% in Sejong City, 120 kilometers from the capital. Statistics Korea said the exodus is largely due to soaring jeonse prices in Seoul, or Korea's lump sum deposit rents. In fact, the price of jeonse apartments in the capital grew about 7.5% from the beginning of this year to September, which is roughly 2 times faster than the average growth nationwide. It now costs over an average $300,000 to rent a jeonse apartment in Seoul that comes without monthly rent. Even so, jeonse supply has been on a downward trend, with the number of transactions in Seoul dropping by over 20% in October, according to the Land Ministry. Sejong City, which saw the second highest increase in new residents, is said to have benefited from an influx due to a greater supply of homes and falling prices. Lee Ju-young, Business Daily.
Not long after the frenzy from China's Singles' Day sale, there's another big shopping event coming up in less than 2 weeks. Black Friday in the U.S. And ahead of it, Korea's Fair Trade Commission is issuing some words of advice for safe overseas shopping. The FTC assured that local intermediary companies that assist Korean consumers in overseas shopping and shipping are subject to domestic rules and thereby required to issue refunds within 7 days of purchase if problems arise. It went on to advise using insurance as well as installment payments, and if purchasing directly through an overseas website, to pay using the local U.S. currency to avoid extra conversion charges. It directed shoppers to Korea Consumer Agency for further information or to file complaints. For those of you who buy imported cosmetics here in Korea, you probably know about their hiked up prices. So, how big are the markups compared to prices you might find in other developed economies? One consumer group decided to look into this, and our Eunice Kim has their findings.
Visible on many street corners, drugstores that sell everyday needs and wants like snacks, drinks, and cosmetics are going strong amid unfaltering demand for personal care products. Business is helped by a growing number of price-conscious shoppers who turn to the likes of Olive Young and Watsons for their beauty needs.
The products are cheaper and they're comparable to department store brands.
But wait, is the true price really more competitive at drugstores? A civic watchdog, Consumers Union of Korea, recently examined 65 imported beauty products sold at department stores and drugstores. Of them, 54 were found to have higher price tags than the same products sold in the US, France, Germany, the UK, and Japan. Particularly, cosmetics sold at drugstores had more inflated prices, at upwards of 2.4 times their developed country counterparts, compared to department stores where the difference topped off at 1.5 times. And when variables like exchange rates and customs expenses were excluded, the gap was substantial, the difference reaching as high as 10 times between the import cost and sale price.
Profits from distribution can be much higher for drugstores here than in other countries. The original prices might be cheaper, but those savings aren't going to customers.
The consumer group went on to suggest one way to tackle the price bloating is diversifying sales channels, handing customers more options and raising competition to eventually drive prices down. Eunice Kim, Business Daily.
The key to making self-driving cars work is a high-precision digital map that contains detailed information about roads and their surroundings. And scientists here in Korea are currently trying to perfect this mapping system so that they could commercialize driverless cars in the near future. Our Won Ji-yeon tells us more.
Here's a car that can drive completely on autopilot. It comes with multiple cameras, surround radars, and a laser scanner that allow the car to safely position itself on the road. It can also generate a real-time map of its surroundings.
The vehicle is equipped with ultrasonic sensors that can collect and process data of its environment to build a three-dimensional map.
These digital maps are the secret to self-driving cars. They contain all of the intricate information about the road to steer the vehicle in the right direction.
We've developed a number of sensor-related technologies, but we still don't have the geographic information for our mapping system.
By combining our mapping knowledge and experience with the Science Institute's technology, I believe Korea can soon become a global leader of the autonomous car industry.
Once the mapping technology is complete, Korean scientists hope to commercialize autonomous cars within the next 5 years. Globally, experts predict that driverless cars will create a $42 billion industry by the year 2025.
Won Ji-hyun, Business Daily.
And that wraps it up for today, but we'll be back tomorrow at the same time, same place for your Business Daily. Thanks for watching, and goodbye for now.